Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 0.2% there. On the S&P Nasdaq 1.7, semiconductor 1.3, Dow negative numbers there. Russell 2000 positive 1%. Transport banks down a little bit. Looks like energy did get hit 4% negative. Biotech did make a move along the home builders and retail. These guys are up about 2 to 3%, close to 4% on the retail. Looks like healthcare is down, utilities down, emerging market is down as well. You got the Bitcoin up about 5%. Gold, silver miners did get hit today quite a bit. Dollar up, oil down a lot. Treasury bond up slightly. VIX is flat today. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed on Friday, and looks like we actually saw that down gap this morning here. So you can see we opened down right here, and we did see a little bit of fluctuation on that first hour, but looks like that level right here did act as support. That's a level you can see buyers are kind of stepping up here, buying that dip, showing us that a little bit of that triple bottom activity right there. So today with that down gap, I think bears needed to push it all the way through to below 373 to go after this up gap. But this up gap is now protected. Not only that, when the down gap was opened this morning, and that down gap was a crucial down gap, because if the bears were able to keep that down gap open, they can really pressure the buyers to keep the price low and continue to have the buyers bleed and then have the price come down and fill this up gap. Well, bulls were able to bring it up. Got a little bit of 3-hour reversal candle there. A little bit of that inverted hammer candle right there, bullish candle on the 3rd hour, 4th hour, 5th hour, 6th hour, as you can see. So the gap did get filled, and that's a good news for the buyers, because they can't afford to have another down gap opening up right now. And what's been the biggest problem for the buyers is that we're dealing with this midterm downtrend this entire year with many down gaps that bulls needed to go up and fill. Remember this down gap right here, right? This down gap got filled, and then that level acted as a resistance. So you can see there's another down gap coming about this morning that got filled. The only question is this gonna be acting as another? Keep in mind though, we are still around that midterm moving average, and that's exactly that's the same scenario. This down gap were similar. This down gap was filled, and then they were hanging around here for a day or two beneath that midterm moving average. Down gap from this morning was filled, and we're slightly above the midterm. But keep in mind, remember what I say all the time, price getting slightly above these moving averages not as important as the trajectory of its moving averages direction. So you can see that midterm moving average still declining, telling us that we're still in the midterm downtrend. So there's still a lot that needs to happen for the bulls to gain any kind of momentum. I think only argument the bulls are going to have right now is, could this be potentially some sort of higher low, right? That's a low, that's a higher high. Only way we'll know that this is an higher low is if bulls can get up and go up and make another higher high. That's the only way we can say that that's a higher low. As of today, we do not know. We are above my micro-term moving average and the short-term moving average, and these two moving averages are pretty much flattening out, telling us in the short term and the micro term we're trendless. And you can see that just based on the price action alone in the last several days. But my midterm moving average, just like it's been this entire year, continue to tell us they were in this midterm downtrend. So should there be any kind of decline, obviously 381, 573 is the level of interest for support. what the bulls need to do is they need to get this price far, far away from this midterm moving average, because as you can see, you know, that level is going to act as strong. It acted as strong resistance in the past. It has good probability it may act as strong resistance here again, unless you put that price far from it and stay around or stay afloat, so they give some time for the midterm moving average to kind of rise back up. And that's the only hope for the buyers. Let's check out that oscillator. See if you can extract any more information. So we've been analyzing this market, looking at the 65-minute chart, and especially looking at a lot of these, oscillator actions and divergences and things like that. I have to say, though, this is the first time we're seeing pretty slopey bullish divergence here. As you can see, we've been in this consolidation right here. As you can see, right? Maybe short-term base. I don't know. We don't know that yet as of today. So usually what happens is when there's a base forming, usually the oscillator will kind of hang around at the top, at the bottom, in that sort of fashion. But what happened was, you can see we got nice higher low on that oscillator, while the price seemingly printing equal lows. And just that the slope of that you can see it has the angle to it. It is a sharp angle towards to the upside. And so I think that's why there's that momentum's been getting built here. So even with the down gap today, I think bulls were able to kind of get the price back up. And you can see that oscillator cross back up here. And then because of this cross, we actually formed a bullish divergence. Remember, that's low, that's higher low, right? Lows, right? Equal lows, right? So, but however, all signals can fail. And a lot of you are going to argue that, okay, we've seen a lot of these bullish divergences this year. A lot of them we did see a lot of them not playing out. Yes, that's true. Though we did see this bullish divergence playing out, at least for a little bit. You can see definitely got lower lows right here. See that? Lower lows. And then we got that slight higher low. Higher lows and higher low right there. And we did see about 2 weeks of bullish run, right? This one is seemingly, as of today, looks much more potent. Much more. Looks like there's a lot of strength behind this bullish divergence. We haven't seen this kind of bullish divergence this entire year. So this one's looks to be a little bit more special than the ones that we've seen this year. However, again, all signals can fail. So what do we need to see? If you're a buyer and you're desperately seeking higher prices because you've been getting hammered this entire year, well, we need to see a follow through, right? Especially the fact that when we did get to the midterm moving average, there were no follow throughs. So we got back to that midterm moving average, and this time we have the bullish divergence supporting the buyers and the base, potentially a base. We don't know this is a base as of today because it must break out first before we can say that that's a base. So we need to see not a gap down tomorrow, not a tankage tomorrow, not a shenanigan down move. We need to see, for those buyers, a follow through with strength. We can't even see slight sideways, slight down day, a little bit. It needs to see a strength as quickly as possible, and bulls need to go after this down gap at 400 and gotta fill that gap at 400. That will be the only way bulls can survive the month of July. If not, bears will bring it down and they will want to see more blood. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening English training tomorrow.